Lori, the funny thing about that poll is it's like I'm slamming the stock market because Bitcoin's up 30%. A 7% gain for the S&P 500 in 90 days is damn good.
It is. It's great. And for the year as a whole, stocks have had an even better year. And look, Brian, we're in a hot economy. We're seeing GDP coming in, very well above trend. That's something we really didn't see much post-financial crisis. But historically, when you get a hot economy, you get extremely strong equity market returns. A hot economy is expected to continue into next year. So markets have also been discounting that. But like you said, the 7% move's not bad. It may not be quite as good as some of these alternative asset classes, but it is still quite a stellar move.
I feel like there's there's two worlds going on right now, Lori. Planes are packed, malls are packed. I mean, packed to the point where there are lines in Pennsylvania to get into stores on Sunday at the King of Prussia Mall. True story. But yet we're hearing all about the new rise of COVID strains, new concerns. I mean, you look at it, it's like, how do we square the two? But it appears that despite some of the worries there and a rise in some cases, outcomes have been better, and it feels like the economy continues to power on. What are you seeing, and what do you think is going to happen in the next couple of months?
So look, Brian, I'll just say I am from the South. I grew up in Alabama. I still have a lot of family and friends down there. So I've been very attuned to what's been going on with the virus this year, but I'm also a professional prognosticator on the S&P, right? So we also watch a lot of data. And I'll tell you one stat that I've been focused on, a lot of other people watch it too, is just looking at the open table dining activity, which has flattened out over the summer. A week ago, we wrote about how you'd seen sort of deterioration at most of the states around the country, not just in the South. We think a lot of that was because of the Delta variant and concerns that we're building. But when we updated the data yesterday, we found that a lot of states are starting to now show some signs of stabilization. And I will say, in general, we're seeing the response to the Delta variant in that data set. A lot of people who have been focused on reopening, frankly, and have been excited about getting on planes have been ignoring those kinds of stats. But at the same time, while we see a little bit of concern, a little bit of reaction in there, they're holding up remarkably well. We've seen a flattening out of that data set, not a collapse in that. I think at the end of the day, we heard early on from a lot of S&P companies on the consumer side about how mobility was still improving, that we aren't seeing shutdowns. We had a number of companies last week in reporting season say our guidance doesn't include the possibility of further shutdowns. And I think that's generally, what we're seeing in terms of our societal reaction is that we're not going back to lockdowns. We're not going back to shutdowns. And that is allowing the economy to keep muttering through.
But that's got to be, or maybe not, a huge market risk. I mean, as we head into fall, if it's like last fall, that's when the Northeast, you watch this sort of seasonal trend. If we get some kind of renewed talk of that, is that the risk maybe we're not talking enough about?
Well, look, I think that it's been a difficult market this last month or so because people are just focused on what they want to be focused on. And it makes it very hard for people who are focused on different things to have conversations about what's going on. But I do agree with you that in the short term, at least, there does seem to be a little bit of a risk. And if you look at that reaction of the market to that University of Michigan consumer sentiment number, markets were simply not prepared for the idea that this Delta variant was having an impact on sentiment and behavior. And we've basically gone over the past week or so into negative economic surprise territory. We've seen the Citi U.S. Economic Surprise Indicator dip down into negative territory for the first time in a very long time. So I do think in the very near term, there is risk that investors have been too complacent about the short-term impacts of this variant. I think back to school is a very important clearing event for markets to get through, especially just given the concern that we've seen rise around children and the Delta variant. A lot of unanswered questions there. I'm not going to try to answer them for you this morning, but I do think that's a critical catalyst that markets may need to get through.
Yeah. The markets have been good with the exception of one group, small caps. They're actually down over the last 3 or 4 months. Is it safe? Is it good to buy small caps again?
So look, I think small caps are this wonderful economic barometer. They allow you to price in so many different risks, whether it's inflationary risks, whether it's domestic growth risks. I think in the short term, as long as markets are digesting the short-term impacts from the COVID variant, until these COVID clouds clear, small caps are going to be a tough place to be. But one thing I'll tell you is we haven't seen small caps really breach true correction territory this year. They've had a number of lumps. They haven't gone down more than 10% from their peak. So the market is telling you that they don't really expect a true growth scare to ensue from all of this. I think you'll have a nice intermediate term trade in small caps once these COVID clouds clear. We are still facing hot GDP next year. Small caps traditionally do very well. Looks like some of these inflationary pressures may be peaking. That should help their margins as well. But I'll tell you, Brian, as much as I love that space and a lot of things about that space, the Fed always kills the small cap trade. We reliably see when Fed rate hikes start that small caps see a major peak relative to large cap.